Did you know that taking a second job may not be enough to help you get qualified for a mortgage? So I'm Trisha Ghosh. I'm a lender and I've been helping people get loans to buy a home for over 8 years now. And today I want to talk about variable income because it's not really common sense how we have to count variable income. There's a lot of regulations on the mortgage industry, and therefore sometimes it doesn't make sense how we have to do things. Variable income is one of those. So if you have a second job that you've recently started, or you get a bonus, or you get commissions, or you're self-employed, anything recent may not even count in what we actually look at for your income because we need a 2 year history on all of your variable income. So if you have a second job, you need to have worked that second job for 2 years before we'll be able to count the income for that second job. We can count the assets. So any income that you make and money that goes into your bank account can go to help towards your down payment or closing costs. But as far as your debt to income ratio, that variable income may not count if we don't have at least 2 years of history and it's increasing or stable. So if you made a huge bonus in 1 year of $50,000 and then the next year you only made a $20,000 bonus, well, that's a significant decline in income. So we may not be able to count that bonus because it's not stable. You're not guaranteed to get that the next year. So how do we know it's supposed to continue? And same thing with commissions too. We have to average those commissions over 2 years. We want to make sure that they are stable or increasing, and then we can use that 2 year average for your income. Self-employed income is a whole different category where we have to get your tax returns and we put all your numbers into a little spreadsheet that we have. And some things we can give you back, but some things we can't. And so your taxable income is close to what your variable income that we can actually count is. And I get it. Self-employed people don't want to pay taxes, so you write everything off in the sun. But that means that the income that we can use is significantly lowered too. So other types of variable income would be like side gigs. If you sell stuff on Etsy, if you have an audiobook recording that gets bought, things like that. Those are ones that we can use as well, but we still have to have the 2 year history and just take an average over the last 2 years. So the variable income that we can't use is stuff that you don't report on your taxes. So gas money from grandma doesn't count. Can't use that. If you're a waitress and you have tips that you don't report to on your taxes, we can't use that income then. If you get paid under the table and don't report it on your taxes, that's not income that we're going to be able to use. So you have to show proof of it and pay taxes on it for the most part. So if you're not sure about if income that you make will be counted or not, come talk to a lender, get pre-approved, and we're going to look at all your income and make sure that what we're counting is reasonable and that we can document it and that we're going to be able to actually use that income. So thanks. It's Trisha Ghosh.